Hi, good morning to everyone. Happy Tuesday again. Thank you, Ryan, for covering fundamental and the macro events in the market at the moment. I think the market is in a very iffy situation right now. We have experienced really good trends for the past month, 2 months or so, September, October. But for the past 2 weeks, especially if you look at the market like euro dollar, pound dollar, Aussie dollar, it has been consolidating quite a bit, frustrating some of my clients. And I mean, if you look at indices as well, like S&P and the Wall Street, pretty tricky sessions last week. I think when it broke key lows, I think a lot of traders or a lot of investors are thinking that there will be a major correction coming up, but only for it to bounce back up quite significantly. I will go through the charts a bit later. Yeah. Okay. Before I start, so for those who are new, hold on, I got somebody that says a moment, yeah. So I know I can see somebody saying that she can't hear anything. Okay, all good, yeah. Okay, so for those of you who's your first time attending this webinar, this we divide it into two parts. Ryan will touch more on macro events and fundamental news. I will talk more on technical insights about technical analysis. Okay, so but as a trader, right, I think it's very important now. When you listen to analysts or market strategists talk about their views or about macro events, the next question you need to ask yourself is, how do I apply it to my trading? Okay, that's where technical analysis come in. Okay, because trading is all about risk management. It's about knowing how to plan your exits, your entries, and basically your positioning yourself to give you the highest probability of success in trading. Okay, before I move on or before I forget, let me go through a simple disclaimer. Okay, just note that IG provides an execution-only service. This webinar is intended for general circulation, does not take into account specific investment objectives, financial situation, or particular needs of any particular person, and IG accepts no responsibility for any use that may be made of this information and for any consequences. Okay, so moving along. Now, I'd just like to reiterate this again. So for those who are new to the webinar, I'm a big believer in technical analysis in terms of charting, is because just this sentence, that it is more important to know when to buy and sell than why the Aussie dollar, for example, went up or down. Okay, so if you hear somebody's view or if you hear what's happening in the macro events, the next question to ask yourself is to look at the charts and know where support, where resistance is, how to get in the trade, where to put a stop loss and things like that. Okay, and how I analyze the charts every single day. Okay, nothing new. I don't change my methods. I always stick to the same methods. Okay, so this is how I look at the charts based on price action. And essentially, we are studying swings in the market. Yeah. So when I say about swings in the market, it means that significant levels whereby the market turn. And essentially, I'm trying to categorize the market to these three phases, either as uptrend, downtrend, consolidation. Okay, in theory, of course, the patterns look really nice and simple on a PowerPoint presentation, but that's where I'll move to the live charts and show you live examples, and hopefully you can grasp a bit more information or a bit more insight on that. Okay, because it is very important to have a bias. Regardless whether you're trading on the long-term charts, on the short-term charts, you need to have a bias. Are you bullish, bearish, or neutral? Okay, because if you have a bias in the beginning, it sets, it gives you a bit more preparation on what you want to do. So for example, if you're bullish, all you're looking to do is to buy, you look for support, you look for multiple reasons or multiple confluence areas of support, and that's where you plan the trade. Okay, so moving along, let me move on to the charts right now. Enough of my blabbering. Okay, so what I have set up here for you guys is basically a daily and a weekly chart. Okay, because we do this webinar weekly and the outlook is normally for the week. So if you guys want me to look at shorter term charts, please, I'll be more than happy to just put it into the question box, type into the question box, and I'll oblige. Yeah. Okay, so let me start with the indices. So let's go to the S&P 500. Now this is the, Okay, I got it the other way around. Never mind. All right, this is the weekly chart that I drew for you last week. Okay, so you can see that we did break a significant channel support, all right, 2 weeks ago, of around the 1925 area, and this bearish engulfing candle is considered a significant break. All right, what happened the following week is a bit tricky because if you look at this candle here, all right, of course, on hindsight, it's easy to say because the candle has formed. But during this week, okay, let me just focus your attention onto this particular candle here. Yeah. Now, during this week, all right, you might think that the bears are in control because previous to this candle, it was a really bearish engulfing candle, breaking a key channel support that was supporting all the way from 2013. And during this week, you might be trying to short, and then immediately what happened? When it hit close to 1800, it just bounced back up, forming a nice bullish pin candles. Okay, now a bullish pin candle is very significant, especially on a longer term chart like a weekly chart. Okay, it just goes to show that there's a lot of bullish momentum still around because in this candle, what it says is that the bears are trying to push it down, but when it hits certain level, a lot of buy orders were triggered, and basically the candle couldn't close anywhere below or near the lows. It shot all the way back up. Okay, and if you look at the weekly chart of the S&P, it is quite evident that bullish pin candles are quite prevalent in this chart. Take a look at this example here. All right, this is almost like it's considered bullish pin candle as well. This one here as well. This one here as well. This one slightly. Sorry. Okay, so what I'm trying to say is this: whenever it hits certain level of support, you notice how the market react based on the bullish pin candle. All right, so it's something quite evident in the S&P chart. Now, last week we went when we were looking at this candle. I would say it's going to be a quite tricky week because we are looking at where the bulls or the bears are trying to fight it out. Okay, because at one point we broke a key support, and the other hand we had a nice bullish pin candle. So it's a bit of a conflict of news there. So as retail traders, it's easier to wait and see what happens. Now what happened was this. Let me zoom into the daily chart to give you a bit more insight. Yeah. So I did mention that we bounced off this near the 1800 levels, and I did mention that the key level to look up for was the 1900. Yeah, 1900. Okay, the reason why I said 1900 is so important is because if you go back to the weekly chart, you look at the 1900 level, you see the resistance here, support here, and might turn potential resistance again last week. So at the 1900 level, okay, I mentioned that if we manage to stay above this level, most probably the bulls are in control. However, if we stay below 1900, most probably we're coming back down to test the lows of 1820. Now what happened was that the market pushed it above 1900 with a very strong bullish engulfing candle. And this gives a heads up that, hey, the market is bullish again. And basically from there, we push up all the way to 1960 again. Okay. Now, I'm not a big fan when markets do things like this, whereby you make a big drop and then almost a V-shaped recovery, because it's quite difficult to trade in the sense as because I trade on pullbacks, right? When the price action moves like that, it's a bit tricky. Okay, so I'm not a big fan when the market does something like that, but it is what it is, all right? But right now, the key thing is this: if you are trading the S&P, just note that the next level of resistance is around this 1980 level. Okay. Now the big question that you want to ask yourself is this: if you are bullish on the S&P right now, where would you want to buy it? Okay. Some clients say I like to buy it here. Some clients say I like to pull back to and maybe back to 1920 and buy it here. But whichever way you want to buy, if you're bullish, right, ask yourself where's your stop loss. Okay, where's your stop loss? Because whether you buy it now or you buy it here, okay, where do you want to place your stop loss so that if it's wrong, you're out? Below this swing? Or maybe all the way here, if it retraces all the way back to 1880, you want to put a stop loss here? So that's an important question because we need to plan in terms of risk to reward. And for me, the target, the closest target that you want to look at if you are buying now is near the 1980. That is resistance. So you ask yourself, where's your stop loss? Is my risk to reward positive? If my target is 1980 and I'm risking all the way to 1920, is it a good trade? Okay, so these are questions that you want to ask yourself whenever you place a trade. Okay, so basically for the S&P 500, just be a bit careful based on the price action. It's a bit tricky. Okay, basically the market is consolidating at the moment. Okay, the reason why I say consolidating is because of all this conflicting price action around this level here. So just be mindful of that. I did say that whenever the market is consolidating, I'll try to draw up certain levels of chart patterns to try to see what kind of pattern it might form. Okay, right now I can't really see it. It might do something like this. Now this is not a nice flag at all, but I'm just giving a heads up to myself that say it might form some kind of chart pattern. Okay, as the week develops, we have a better view, but just keep a lookout because the market currently is consolidating. Okay, so just be very mindful of support and resistance. All right, so let me go to another index. Let's go to the Hang Seng. Okay, now the Hang Seng, of course, we all know that there's the pro-democracy talks at the moment right now. This is the chart that I drew last week. Nothing much has changed. Okay, nothing much has changed on the Hang Seng because this is a Hang Seng weekly chart. And if you notice, these are all the circles that I drew because we make significant higher lows as well as similar highs here. So what I know is that the Hang Seng is consolidating as well and is forming a very tight, some kind of wedge pattern. You see this area? Okay, or you can call it a ascending right angle triangle pattern. But basically, we know that the key levels are around the resistance, around 23,600, and the key support is 22,700 or so. All right, last week we were somewhere here, and we have really not moved much since. We're still trading within the range. So there's no breakouts at the moment, but keep a keen eye on this particular market if you're trading the Hang Seng, because any news from the pro-democracy talks will move the market, and it breaks up from either side. You want to be able to capitalize the move. Okay, so it has been consolidating for the past week. Nothing much has changed, but look out at these two key support and resistance level. All right. Okay, I have a question here. Hold on. Yeah, S&P. So let me just move back to the S&P again. The question, Mr. Rama, hi, thanks for coming. So the question, if you want to be bearish on the S&P, it is a good time, right? Okay, this is how I see it. Okay, the S&P is consolidating at the moment. Okay, the question is, if you want to be bearish, is it a good time? The S&P is in consolidation mode at the moment. So if you're bearish, you want to take it at resistance level. Okay, what I can see from the chart is the next resistance level is around the 1980 level. I'm not too keen on where we are right now, because if I go into a daily chart, right? If you look at the daily chart, now where is, do you think the nicest level of resistance that we can see is here, 1980, right? And right now we're just, this level is resistance as well, not the best resistance. I prefer the 1980 level, simply based on the number of touches here. Okay, so I'm willing to wait. So it depends on how you want to take the trade. Okay, but for me, again, because of the price action here, I'm a bit more wary. Okay, now let me just bring your attention to, Sunil says that 1976 and 1980. Yep, correct. Those area are resistance. Okay, like I say, the support and resistance when it comes to higher time frame charts like your weekly and daily charts, it is a zone. It is not a specific price. So yes, Sunil, you're right to say between 1976 and 1980. So anywhere around this area here. Okay, right now we have not touched there yet. Okay, that's resistance. Now let me take you to another index that I think has a nicer level to look out for, and that is the DAX. Okay, I know some of you don't trade the German index, but just for education's sake, let me take you to the DAX. All right. Okay. Now the reason why I think the DAX is a nice significant level is, let me just take you to the weekly chart of the DAX. All right, and this is a circle I drew last week. Okay. Now, this is a weekly chart of the DAX, the German index. Okay. And what we can see or what we can infer is that along the 9,000 area, okay, this circle that I drew last week is a key resistance level. Are you able to see how nice the level is as compared to the S&P 1980 level? This level here is a very clear resistance, support term resistance level. Okay, if it's clear to me, if it is clear to you, it will be clear to the big traders and the hedge funds and the banks as well. So it is the same thing. Now, let me just take your attention to this level. Let me just take away this circle. Yeah. Okay. So I draw a line around the 9,000 somewhere here. Okay. So you notice that it's, since 2014, it acted as support, and now potential resistance. Yeah. So again, I say that it is a zone. Okay, so what I do as a trader is I analyze on a higher time frame, and if I know that this level is a key resistance level, I will wait for the shorter time frames like the daily or the 4-hour chart to show signs that it wants to come down before I'll take a trade. Okay, but I always use a higher time frame to analyze, and for me, this whole area here between the, let me see, the 8800 to 9,000 level, this is all resistance. Okay, now pay attention to this little channel forming as well. Again, this is not the best channel. I'm just drawing because it might happen. Okay, because for me, a lot of indices are in consolidation mode at the moment, and I'm trying to see what kind of chart pattern it will form. So this might be a potential channel. I'm not sure. Maybe next week when I'm talking to you, we might be at the resistance level here. Okay, but it's something that it might form. But what I'm keen on is the 9,000 level. It's a very key resistance. Okay, so if you look at the daily chart, now what happened is this. Let me just draw the line at the 9,000 area again. Okay, about 9,000. Okay, let me just delete all this other line, not that important. Okay, so the daily chart has clearly reacted from the key level that I spoke about because of the candle. Okay, I think yesterday I was speaking to some clients over the phone and I did mention this, and immediately after we hang up, in the evening's trading session, the US trading session, this red candle appeared. It's not surprising, really, because a lot of people are looking at this resistance level. All right, the key thing to look out for is whether we can break lower. Because if we break lower, let's say we break below the 18,850 level, there's every chance that the market might test the bottom of 8,500. Okay, but the market has reacted from the 9,000 level, all right, based on this candle. So it's a key level to watch out for the DAX. Okay, let me move into a lower time frame to give you a better picture. Okay, so basically this was the 9,000 level again. Okay, now again, I would like to emphasize the higher the time frame you go, support and resistance is a range. It's not a specific price, because some of you might call me and say, hey, Nabil, you say 9,000 is a resistance level, but look at this candle here. It seems to have broken above the 9,000 level, isn't it? Isn't that a breakout to the upside? My answer is no. Why? Because in weekly chart, that whole 9,000 between 8,500 and 9,000 is a resistance level to me. And if I'm basing my decision on a longer term time frame, all right, if it's a resistance level, I'm not keen to long a resistance level, isn't it? So these are the kind of reaction that I'm looking for if you are bearish. A little price action and a big bearish engulfing candle on the 9,000 level. Now, whether this 8800 level is quite key to me. Okay, this is a 4-hour chart, yeah? Because if it breaks this short-term support, there's every chance that it might come down to test the previous low of 8500. Okay, so this is how I plan my trades. I take it from the top down. Okay, I'm taking it from the top down. The reason why I say this 8800, this 8850 level is quite important is because a 4-hour trader might say that, hey, Nabil, isn't this a inverse head and shoulders pattern? Do you guys agree? This looks like an inverse head and shoulders pattern. Yeah. So if it's an inverse head and shoulders pattern, and this is my neckline over here, didn't we break up from it? So inverse head and shoulders is a what? Reversal chart pattern, isn't it? So we're making a series of lower highs, lower lows around here, and then consolidate into an inverse head and shoulders pattern. It broke above the neckline. Where's the neckline? The neckline is exactly the zone I'm talking about, 8850 level. And it started to go up. So shorter term traders on the 4-hour chart might say, Nabil, this is an inverse head and shoulders pattern. It has broken out for neckline. Chart pattern theory says that it will go up further. Okay, but the longer term trader says that, hey, 9,000 is the key level, is the key resistance. So I think that the resistance area will be respected and we're pushing it down back to the 8500 level again. Right? So both traders can be correct, but it's how you take your trade that's important. Okay. So the key level for me, 8850. This will be a deciding level. Because if the price breaks back below the 8850 level, all right, it goes to tell me that the neckline is no longer valid. This neckline that was resistance became support. If it breaks down again, means that the support doesn't hold. And it means that the price might go back to test the previous low around 8500. Okay, so just a bit of price action and trade planning for you. All right, I use a DEX example because we are approaching a very key level. Okay, I have a question here from Roy. For you, anytime there is no higher high, it will be okay. Roy's question is this: if there is no higher high, higher low, or higher low, higher high, it will be considered a consolidation pattern, right? Exactly. Okay, exactly. Now, if I go back to my PowerPoint presentation, now as long as there's no consecutive higher high, higher lows, or lower high, lower lows, you can assume that it might want to consolidate. Okay, the example that I have on this PowerPoint slide is basically a series of lower highs and high lows, and it's forming a wedge, right? But this is just one example. It can form any kind of pattern. But yes, you're correct. Okay. Coming back to, okay, another question. Coming back to the DEX, when will you consider to buy? You guys are really pushing me. I can't give buy or sell signals. Okay, I'm sorry, but basically, again, the key level you want to watch out for is the 8850 because it was a previous head and shoulders neckline, previous support, and if it breaks this level, then there's a chance that it might come back to test the bottom again. However, if this level holds, then we might try to test the resistance 9,000 and see what will happen from there again. Okay. Okay, sorry, Roy. You said that will you consider breaking above 9,000? Now, when you do trade planning, right, it's all about painting different scenarios, all right? Because we don't have a crystal ball; anything might happen. But what we can do as traders is to know your levels, so that when price reacts or breaks up from it, we are able to know what's happening and act on it. Okay, it's not about having a crystal ball or trying to know what will happen next. It's about giving your levels and painting different scenarios. So for me, the DEX, again, if it breaks below the 8850, I'm more inclined to think that the key support has broken. It might test the bottom again. But 9,000 for me is key resistance. So if 8850 is respected, if the market starts moving 9,000, again, I'm keen to see what happens in that area. If you see a bit more bearish price action on the shorter term time frame, like 4-hour chart, the 9,000 level, then maybe yes, the bears are in charge. All right, but if it breaks above 9,000, let's go back to weekly chart. If it breaks above 9,000, then my second scenario might happen, which means that we might come up to test the top of this channel. Again, I repeat, this channel is not a good channel. I'm just drawing it there because it might happen, because it's consolidating. Okay, so that's my analysis. Yep, so no worries, Roy. Questions are good. Okay, so moving on, let me just see. Okay, most of the indices are quite similar, so I won't touch much on that. Okay, let me just touch Singapore blue chip. Okay, you notice that Singapore blue chip looks like what? Looks exactly like the Hang Seng, isn't it? Okay, because what we have done is basically we have a nice support trend line that's supporting it from early 2013 all the way to now. And the key support level is around the 357 level. Okay, the market tried to break below it, but it bounced back up, forming a bullish pin candle. Okay, it looks quite similar to the Hang Seng simply because we are trapped in some form of ascending triangle, and we are getting to the apex of it, so a breakout will come sooner rather than later. Okay, basically levels you want to look up for is the 357 support as well as around the 366 resistance level. Okay, because the market is consolidating right now. Yep, so this is a weekly chart, it's a higher time frame chart. Of course, the daily chart is a bit more bearish. Okay, the daily chart here. All right, you can see that it was on the downtrend, and right now it's just testing resistance. Okay, but daily chart, you can't infer much. For me, the weekly chart tells a better story. So just have a look on the weekly chart on the Singapore blue chip for you to try to trade the breakouts to either side. Yep. I have a question here. Sorry, the questions are coming good and fast. This is a good thing. Keep it coming. The CAC. Okay, the CAC, I will go into it. Will CAC index a similar pattern? Can we review CAC for a quick one to spot any support resistance? Sure, I'll go to the CAC next. If you can, please comment on China A50 or Shanghai. We have the China A50. Okay, I'll go to that next. Vinny, what is your preferred risk to reward ratio? Okay, and I got Mr. Rahman, how reliable the charts. Okay, all right. So again, let me touch on the risk to reward ratio. Okay, it depends on your strategy. My strategy, my risk to reward at least 1:1. At least 1:1, because if it's not 1:1, then there's no point. All right, so what you might want to do is, for some traders, especially if you're new, if your risk to reward is 1:5 or 1:10 even, most probably you're looking at a longer term setup. Yep, and when you trade longer term, especially if you're new, one key thing that you need to develop, and that is patience. And it's easier said than done, trust me, especially if you are trading longer term and you're the type of trader who target big profits. So let's say you're targeting like 100 to 300-400 pips type profit. Patience is very important. Okay, for me, like my own personal weakness is that I'm quite impatient to let a trade run. I think it's evident for most traders, right? When you see 100 pips or 100 pips of profit, sometimes you just want to cash out. Okay, but if you are the type of trader, or if your system or strategy that you follow is running based on big profits, so maybe you, out of 10 trades you have like 6 or 7 losses, but the 3 big trades, big profitable trades, are the one that makes you an overall profitable trader. If you're that sort of trader, or if your system or strategy follows that kind of method, then it's very, very important that you need to let your profits run. Okay, but for me, for me, I go more for quantity. So out of 10 trades, I'm looking for 6 winners at least. All right, so some of my winners can be very small, no problem. So for me, 1:1 is fine. Okay, 1:1 is fine. But it all boils down to your strategy and your system. All right. Okay, just give me a moment. Let me go do a quick one at CAC. Yeah. So I have a lot of questions there. It's a good thing. I'll try to answer as much as possible. If not, you can send me a separate email as well. All right. Okay, the CAC. Okay, I've not analyzed the CAC. Let's do an analysis together then. Okay, so we have the CAC weekly chart around here. Now, what can we infer? All right, we were making a series of what? Okay, let's do a bit of price action theory here. Okay, you got a higher high here, you got a higher low here, another higher high here, another higher low here, a slight higher high here, not really a higher low but a double bottom. We still considered a uptrend because the support is not broken. Another higher high here, a same low here. So again, uptrend is still intact because the support is not broken. Another higher high, another higher low, another higher high, another higher low here, another higher high, another higher low, another higher high. Now we have a slight lower low, or we can even consider this double bottom. Okay, but this lower high is the first sign that a reversal might happen. And this is a lower low. All right, so I hope you are able to appreciate how the trend changed on the top here. And right now we have made a lower low, and it is on a downtrend. Okay, so let me take away all the circles. Okay, if I'm going too slow, please tell me, because I just want you to be able to appreciate swings and price action. All right, and this is on the CAC weekly chart. All right, so let me draw a line here. This is support level close to the 4,000 level. Maybe you can call it 4030 level. Okay, and let me draw another support somewhere here. Hold on, let me just see somewhere here. Okay, so we have the key support level here that was broken around the 4030 level. And it's the same story as a lot of the indices. You see that the markets came to break the support. You went to a next level of support around the 3008 and shot back up. So that's a bullish pink candle. Now right now here, we are testing a short-term resistance around this level. Okay, somewhere here. Alright, you notice previous support, midterm resistance. Okay, so the CAC to me, it is consolidation to a downtrend. It's quite similar story to a lot of the other indices. Okay, again, look at this. It's starting to form some kind of pattern. It's not clear yet. It's really not clear yet. Okay, but I'm keen to see whether it will consolidate in some form of a triangle or wedge. Okay, I can call it a descending triangle. So what might happen is that it might test the top again here, form another lower high, and come back here as well. Okay, so it might consolidate. This is a possible scenario, and it's actually quite similar to the other indices like the S&P. All right, so for CAC, I am in consolidation mode. Key level to look out for is around the 4200. If it breaks above the 4200, chances are, yes, look out for this potential descending triangle resistance here. Okay, but just the key reserve support is around the 4030 to 4200. Those are the areas you want to look out for. Yep, so that's for the CAC consolidation mode as well. Okay. Vinny, okay, Vinny has a question. How do you determine the start of new trends? Now, for me, a new trend is formed by either two things. One, a higher high, or two, a lower low. Okay. Now, this one is a bit more theory, so I will go through in another week when we have a bit more time. But basically, a new trend, especially when the market is neutral. Okay, when the market is neutral, okay, let me write this down, yeah? So give me a minute. Okay, when the market is from a downtrend or a neutral stance, okay, for it to move to the uptrend, you need to look for a higher high. If the market is on an uptrend or a neutral zone, neutral means consolidating zone, for it to move to a downtrend, you need to look for a lower low. Okay, so essentially these are the two key things that I always look out for. Okay. So for this case, the CAC, what it has done is that it made a same low here and it made a lower high. Now a lower high compared to this high, this is not a change of trend, but it's a heads up that it might come down or it might consolidate. Okay, so a lower high is the first sign of weakness here. Okay, so basically the market will do something like this. It will come up, high high, high low, high high, high low, high high, high low, lower high. So a lower high is the first sign that the bulls are a bit exhausted, but it does not mean a change of trend. Okay, it simply means that the bulls are exhausted. A confirmation of a change of trend is when it makes a new low and it makes a subsequent lower high and it makes another lower low. So this area here is a confirmation that a downtrend has started. Okay, but the first signal that we have is a lower high. Okay, now the CAC here, what it does is that it's made a lower high, it's made a lower low compared to this. Right now, the key thing is we are looking for another lower high for it to continue downwards. So the lower high can be anywhere from here or maybe back to this resistance trend line here. Okay, so just a bit of price action theory for you. Yep. Okay, moving along. Now, I'm sorry if I can't go through to all your questions, yeah, but I try my best. If not, just drop me an email. I will reply. I will drop you a reply. Okay, so moving along. Now, let's go to China A50, right? Somebody asked for that. Okay. Lenny, yeah, I know you're asking about Yahoo again. Just give me a minute. Yeah, I'll go to stocks soon. Let me just finish all the indices first. Okay, I took up most of my time. I've not even touched Forex yet. Okay, so China A50. Okay, I've not analyzed this chart, so let's do it together. Now, based on this price action, right, we have, let me just zoom out and have a better look. Okay, we have a key level here. Okay, I'll say around the 7,000 level. Okay, let me see whether we have any chart pattern. We have a bit of a breakout here. Okay, and we have a bit of support here. Alright, China A50 seems to have broken out from the upside. Alright, if we have consolidated in some form of a descending triangle here, alright, with many form of resistance, and he has it broke out a key level for me, 7,000. Alright, you see that 7,000 was quite a key level. It broke out, came back to test 7,000 support and make another new high here. So it might be a start of an uptrend. Okay, key resistance for the China A50 would be, let me just draw some lines here. Okay, the key level you want to watch out for is the 7,000 level. Yeah. Because if we are able to, right now, this is a weekly candle, yeah. So for me, if there's a long shadow here, this 7,000 here is still respected. So right now, if the 7,000 level is still respected, there's every chance that the market might push higher back to the previous resistance. However, if the 7,000 is not supported, if it breaks below, then we might just move into another consolidation phase. We might come down all the way back to support level around the 6500 level. Okay, so not right now we are key level here around the 7,000. Okay, let me have a closer look on the daily chart. Okay, you notice that the daily chart paints a different scenario altogether. Okay, so that's an important thing that you want to look at. On daily chart, it has broken a key level here of 7100. It broke, it broke a key support trend line. See the support trend line here? Nice bearish engulfing candle. Okay, so right now again, you notice the weekly chart, this whole level here, these two candles here is just a candle, a bearish candle and a shadow. But for daily chart, it looks very, very much more bearish, isn't it? Okay, it's trying to pull back now. If the daily chart does this, right? If the daily chart right now it does a pullback, if it breaks down lower like that, then most probably the weekly chart will be a clear break below the 7,000. And if it breaks below 7,000, most probably we're coming back to support, back to the support levels again. Okay, but if however the daily chart is supported, okay, let's say if it's the scenario number 2, whereby the daily chart comes down again, makes a bit of a double bottom, okay, and starts going up from here, then the weekly chart, this 7,000 level is still supported. Okay, you get what I mean? So I'm using different time frames for you to paint the picture. All right, so that's the CAC. All right, so let me move on to the currencies now. Okay, now let's take a look at the euro dollar weekly chart. Now the euro dollar weekly chart, you notice that we have made a significant retracement. This is what I drew last week. Okay, you know that this support here at 135 was broken. This was a new lower low, and this is where it starts with a downtrend. And what it does that it bounced off the support level of around the 1250 level, and it retraced to a key level. Okay, look at this 128. All right, I drew the circles here, right? Support, 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 turn resistance, and look at how the candles react. So last week we were at the same place. We were near the 128.00, and I see that the key level is 128. Is very strong resistance over there. All right. If you look at the daily chart, we were looking at a bit of a bearish flag formation, and the bearish flag formation is simply a continuation chart pattern whereby the market moves down, okay, consolidates into a flag, and it continues downwards from there. Okay, a bearish flag formation happens quite a lot. Okay, so what happened was that the bearish flag was respected, it consolidated in the flag, and it broke through the flag support, testing the 126 level again before coming up. Okay, now on a weekly chart, a bearish flag formation is normally a continuation. When I say normally, means that it will tend to continue downwards again. Okay, where we are right now is quite a key level. Okay, this level here around the 12700 level is key, because what happens is this: the chart broke through the flag. All right, now it's making a retracement. Okay, but if it comes back down and break the 126 level, most probably we are coming down to test the previous low of 12500 or make a new low even. Okay, but the key thing to me now, the weekly chart is still on the downtrend. Yeah? If the key thing to me, if you look at the daily chart, okay, so if you look at the 4-hour chart, okay, right now what we want to look at is around the 12700 to 12735 level, because this is a short-term resistance level. Okay, if this 4-hour downswing is respected, right, and the market starts coming down from there, most probably on the daily chart, we can infer that the bearish flag formation is still valid, and the market will simply drift downwards, test the previous low, and might test all the way to 125. Okay, so where we are right now, around the 127 to 12730 is key level for me. Because if the resistance is respected, most probably the bearish flag formation is still valid, will continue. However, if it breaks to the upside, then the bearish flag is wrong. Then we might see some form of consolidation, a bit more consolidation, or maybe a push to retrace to higher levels on the 1.3. Okay, so just take note of where we are right now. Very important. Okay, so there's a euro dollar for you. We had a question on Aussie dollar, right? So let me go to the Aussie dollar. Okay, Aussie dollar, quite similar story to the euro dollar. So if you go to the weekly chart, okay, you notice that this level, which I highlighted last week, around the 8900 level, is a very key resistance. All right, and you notice that every time, I mean, we are in a downtrend, that's for sure. Look at the number, how bearish this is. It made a retracement. Look at this candle. And once it hit 8900, the bears push it back all the way down, and the candle body couldn't even close anywhere higher. Okay, the next 3 candles though, we are quite it's a bit more bullish though, and right now we are drifting back towards the 8900 level. Okay, so pay keen attention on what will happen there. Looking at the daily chart, okay, you notice that there's some form of support here, and it's edging higher and higher. All right, we make a significant levels of few higher lows, so the momentum is slightly to the upside. But once it hit this region here, this is the key resistance zone for me, anywhere between 8850 to 8900. If the daily chart or the shorter term chart, the 4-hour chart, shows a bit more bearishness, then there's a chance that we might continue to the downside. Okay, but whether you're bullish or bearish, again, plan your trades to give you the highest probability of success. All right, so if you're close to resistance, ask yourself, is it a good time to buy? Is it a good time to sell? Where's my stop loss? All right, so Aussie dollar, this is a key zone for me. Okay, if it breaks above that, then yes, maybe it might go all the way to 90 cents. But for me, this level here is key resistance zone. All right, so that is the Aussie dollar for you. All right, let me just move on to the pound dollar. Okay, pound dollar. Now, moving on to the weekly chart again. Okay, clear downtrend on weekly chart. No two ways about it. In fact, where we were last week and this week is not much difference. Okay, the pound dollar just made a lower low, lower high, and right now we are still a downtrend. All right, it has tested support of 15900 and it's bounced up a bit. So weekly is still in a clear downtrend. No two ways about it. All right, the main question you ask yourself, where's the key resistance or support to look out for? So that's where you might want to look at the daily chart. Okay, I drew this last week and I said that use this trend line as your guide. Okay, and basically, remember last week I told you that we were somewhere here, and I mentioned that even though it seems that it might be a break of a trend line, don't be too keen to jump on board the long side, because the next level of resistance is around the 16180 level. Okay, because don't forget, the trend line that you draw is always subjective. So some clients might draw it like that, some clients might draw it like that, you see. You see a difference? But what I'm trying to say is this: don't just use your trend line, use your visual support and resistance lines as well. So for this case, it tried to break past the trend line, but the 16170 resistance was there and it came down from there. All right. Interesting thing now is this: it has been supported around the 160 level, and it has broken through this nice resistance trend line, which has been significant from August. And right now, it seems that it wants to test back the resistance on 16170. So there's a bit more consolidation here. Now, I'm going to bring you to a lower time frame because from there, you are able to see a nice inverse head and shoulders forming. Give me a moment. I'm going to bring to the 8-hour chart. Oops, sorry. Okay, so the pound dollar 8-hour chart, all right, you can see that there is a shoulder, a head, and a shoulder, and the neckline is the resistance that I spoke about last week around the 16180 level. All right, so this is a very nice inverse head and shoulders pattern. Now, head and shoulders patterns has quite a high percentage of failures, so just be very careful. But basically, you want to look for a break above the neckline of 16180 for it to move higher. Okay, an inverse head and shoulders pattern is a reversal pattern. All right, so just take a look at that. So if that 16180 is broken, every chance that it might test back to the 163 level again, because 163 is a very significant level. Okay, but right now pound dollar is just consolidating. Okay, it's still trying to work itself out to see whether the bulls or bears are in charge. Right now, it's just consolidating to an inverse head and shoulders pattern. Okay, so that's the pound dollar. Any questions on currencies before I move on to stocks or commodities? Vinny has a question. Sorry, do you use moving average? What is your preferred value setting of exponential moving average? Now, I do use moving average. I do use pivot points. I do use MACD. I will introduce that into the webinars in the future, but right now I just want you to be able to appreciate the very core of technical analysis, which is price action and support and resistance. Okay, because to me, this is very important. If you're not able to tell whether the market is on uptrend or downtrend based on swings, a lagging indicator will not help you much. All right, so a moving average or a MACD or stochastic or whatever indicators you want to use, don't forget all these are lagging indicators. I want you to be able to be proficient at leading indicators like using support and resistance and price action. And once you are good at that, then you can use your indicators to confirm. Okay, I will bring indicators in the near future, but I just want you to be able to appreciate how to analyze based on naked charts. Okay, it is possible to trade just a naked chart studying price action. It is possible. All right, I've seen a lot of clients, a lot of successful traders doing it. Okay, can you comment on dollar yen? Sure. So, okay. Okay, now dollar yen. Now, this is the few circles that I drew last week. All right, so dollar yen, it is very bullish on the weekly chart. What it has done is that it made a retracement. All right, all the way back to the 105 before it formed a nice bullish pink candle up. So there's a lot of bullish momentum here. It's not surprising because around the 105.30, 105.40 level, it was previous resistance turn support. Okay, so it shot up from there. Now, key thing that we want to look out on the weekly chart is where we are right now. Okay, let me just get rid of these circles here. Yeah. Okay, around this level here. Now, the reason why I say this is a key thing is this. Remember I talked about price action just now? Remember I mentioned that when you're looking at the uptrend, the first sign that something might happen like a reversal or consolidation is when it makes a lower high. And this is a potential lower high region. This is where we are right now, around the 108 level. Okay, so weekly is still an uptrend, no doubt about it. It's still an uptrend. Okay, just form a higher high, higher low, high, and potential higher high again. But let's take a look at the daily chart to have a bit more insight. Okay, daily chart's a bit of a different story, isn't it? Now, daily chart, what happens that it broke a key low, it made a lower low, but now it broke back a high, so it made a higher high. So daily chart is a bit of a mix. But the reason why I said this level is important here, this previous low around the 108.50, because if we are able to break above 108.50, then there's every chance that you might test the 110 level, which was 2014 high, and might even continue higher. However, if this 108.50 level is respected, okay, remember on a weekly chart, this would seem like a lower high region, and we might come back down to test the support again. Okay, and the scenario might be, this might be a lower high. Oops, sorry. Let me just delete this. Okay, and the scenario might be, this might be a lower high region. Okay. And we might come back down to test, maybe back to this trend line. Okay, but if this 108.50 level is breached, then there's every chance that we will make new highs and go up. Okay, so look out for this 108.50 level here. Key level to me. Yep, so that's dollar yen. Okay, so you see how I analyze charts are always paint different scenarios. Because as traders, one of the most important attributes is to be flexible in your thinking. Okay, do not be so fixed on your thinking. Know when you're wrong and when to get out. Okay, so it's always good to paint different scenarios and know a level so that you know that, okay, if you're bullish, if it breaks this level, you're wrong, you get out. Okay, so be flexible in that, which is why I always paint different scenarios for clients or for my own trading even. Okay, can you comment Euro Aussie? Okay, let me just delete everything. Wow, today I'm really exceeding the time, so sorry if I'm trying to rush through. Okay, so let me go back to my pen. Okay, I'll move on to Euro Aussie, and then let me touch on a bit on US light crude, and then we wrap it up from there. Okay, so Euro Aussie. Okay, let's see. Weekly chart. Yeah. Okay, Euro Aussie. This is a weekly chart. Now we were in a downtrend. Okay, we broke a key low. This was a, you see what I mean by lower high? You see how significant? See, after it made a higher high, right, for the Euro Aussie, what it did is that it made a lower high. And what happened after lower high? It actually made a lower low. So this was a confirmation of a downtrend. So you see what I mean by an uptrend, a lower high is quite significant because it's a signal that the bulls are exhausted. But and when a lower low is made, it's a confirmation that it is in a downtrend. Okay, so this is just another example. So lower high, lower low, lower high, lower low, lower high here, and another lower low here. So it was in a downtrend. Now this looks to me like a news move with a big bullish engulfing candle on the weekly chart, very significant, and it has broke the previous high here. Okay, so right now we are on the key area here, Euro Aussie. It has made a slight reversal on the weekly chart. Okay, it broke the high around the 14440 level. Now the key level to watch out for is the support here. Okay, around the 143 to 14380. Okay, because this support level here, if it's broken through, then we might come back down here. Okay, however, if this support is held, we might come back to test the key resistance around the 14650 level, and we might continue making higher highs. So for me, this key level here is around anywhere between here. Right now, we're testing the first level of support around the 14400. It can still fall below slightly, maybe all the way to 143. It's still support to me. Okay, but it depends on how you want to take the trade. If you're taking an intraday trade, of course, this is a completely different thing. You need to look at the lower time frames. But if you're looking for a swing or position trade, as long as we are above the previous swing low, which is somewhere here, above the 143, there's every chance that the weekly chart must still continue moving upwards. Okay, now daily chart wise, you can see that this level here is quite a key support. Okay, around the 14350 level. So just be mindful of that. Alright, but weekly chart, it seems that the market has reversed to the upside. Yep, so that's the Euro Aussie for you. Okay, now let me move on to gold. Sorry, to US light crude. Okay, now the reason why I move on to US light crude is I want to use price action and use this particular market to give you a bit of explanation on how price action works. Yeah. So the US light crude weekly, of course, I think Ryan touched on last week. Fundamentally, oil is in a very not in a good place right now. And basically what it has done is that after you broke a key low or key support level of the 9800 level, it came down. All right, there's no pullback. It just made one direction down, and this is a sign of a very bearish market. Okay, now on the daily chart, okay, you notice this key level which I drew, the 9800. You notice how around this whole level here is simply one big fat consolidation. All right, now the reason why I bring up this market is I want you to be able to appreciate price action and how support and resistance levels always react off one another. So we know that this level was previous support. Support here, support here, support here. You notice how the market broke a key support? Okay, when a candle closed below a support, it is considered a break, especially on daily or weekly chart. And you notice how this support level turned into resistance? Not once, not twice, but 3 or 4 times. So it broke below, came back to test the previous key support and resistance, and it made a new lower low. All right, in fact, it made a runaway gap. This is called a runaway gap. Okay, it's a continuation pattern, and it shows a very bearish trend. And what it did, that pulled back again, covered the gap, almost slightly covered the gap, and came down again. So it is very bearish, but it is a case in price action whereby it moved from consolidation, okay, it made a new lower low, and all the way down. Okay, so it's a very nice price action for you. Now, where we are right now on WTI is we are consolidating around the 8,000 level here. Okay, the overall trend is still very bearish. Okay, so I'm key to look out for the 8,000 level. If we break below 8,000, there's every chance that we might make new lows. Okay, looking at the lower time frame, let's go to 4-hour chart. And the 4-hour chart, we can see some kind of chart pattern forming. Okay, a bit of a descending triangle here. Okay, so I'm key to look at 8,000. What I'm like is that it's making a form of lower highs, subsequent lower highs, which shows a bit of bearishness. But if it breaks 8,000, there's every chance that we might make new lows again. Okay, but the high time frame, the daily, weekly, very bearish for WTI. Okay, so there's WTI for you. Okay, any other charts you want to look at? Okay, Lenny asked for Yahoo previously, right? Let me move on to Yahoo. Lenny, are you still around? Okay, I have gold. Okay, let me just move on to Yahoo now. Now, Yahoo on the weekly chart, very fundamentally driven. Oh, sorry, this is a 4-hour chart, so sorry. Okay, Yahoo on the weekly chart first. Very bullish. Okay, simply how the price action works. Now, this actually I analyzed this last week or 2 weeks ago, I'm not sure, but this circle I draw is a very key support. And you notice how the market reacted off the key support, the $37, and just shot up from there. Okay, let me just delete all these lines that I drew last week. Okay, where we are right now, this is a very bullish engulfing candle, yeah. So it seems to be very bullish. Okay, let me see whether now when the market is so bullish, right, you might need to even go to a higher time frame like the monthly to try to see whether there's any form of support and resistance that you can draw. So let me just have a quick glance at the monthly chart. Okay, I can see a key level around here, $40, around the $40. It's broken through the 44 quite convincingly, isn't it? Okay, it is, no doubt about it, very bullish on Yahoo at the moment. Okay, so a new high has been made, and it is on uptrend, no doubt about it. Higher low here, and higher high here. So the big question is, ask yourself, okay, bullish, where's my support? So let's zoom into a daily chart right now. Okay, just be a bit careful there. Now, a lot of clients are very tempted when they see such bullish price action, right? Or they hear some news on Yahoo that's very bullish. A lot of them are very tempted to just buy. Okay, but my question to ask yourself is, always think of where your stop loss is if you want to buy. Because if your risk to reward is still negative, no matter how good the chart looks like, it's not a good setup. Okay, so a possible support level you want to look up for Yahoo is of course back to the $44 here, which is the previous high. Okay, so there should be some form of reaction on the $44. Now, if you're thinking of looking at the $44 support, be very mindful to see whether it can make a new high of 44.80, because if it doesn't make a new high here, chances are that it want to pull back to a bigger retracement. Okay, so what it might do is that for Yahoo, so let me just grab my pen around here. Okay, so if it comes down to $44, look, see whether it can make a new high, because if it doesn't, right, chances are it might come down to a bigger retracement level. Okay, but of course, if it makes a new high, then happy days, it might continue the uptrend. Okay, but if it doesn't, then you might want to look up for the support level, maybe back to around the $43 even. Okay, so it's quite a bullish play right now. It actually broke a key support trend line, but I think there's some news that caused it to push up and even gap up even. So sentiment for Yahoo is very bullish. Look out for the 44 support level. But again, if 44 support level is respected, see whether it can make new highs, because if it doesn't make new high or start consolidating, just be patient. But if the 44 level breaks, then maybe it wants to make for a bigger retracement, and then look up for the $43 level. Okay, that's Yahoo. All right, my time is a bit, sorry, S1, S2, R1. Okay, Lenny, you're asking S1, S2, you mean the pivots? I don't have the pivots on this chart at the moment. If you want to drop me an email, I can send you my pivots. Oh, support, is it? Yeah, support. I mentioned 44 is a good support. It is a shallow support though, but if you're thinking of 44, see whether it can break a new high, because if 44 is broken through, then you're looking around the 43 support level. Okay, but it is definitely bullish at the moment. Yep. Okay, sorry guys, I ran out a bit of time. I think I exceeded it by about 10-15 minutes or so. If you have anything, just drop me an email. I try to answer it there. If not, next week, you can prepare your questions again. This webinar is recorded, so we'll try to upload it as soon as possible within a day or two, so that you can watch it on your own viewing pleasure. Again, let me just guide you through to where the webinar is at. You can go to ig.com.sg, and basically all you need to do is just go to education, okay, and go to Market Talk webinar. All right, and basically you can see that we upload it here. You can register for future events here as well. All right, so again, thank you so much for coming, guys. I'm sorry if I couldn't attend to answer all your questions. Drop me an email. I try my best to help you or give you a call even. Again, come by next week again. We'll cover more stuff. If any questions, please ask again. So just be careful. Always remember to plan the trade and think of risk to reward. Where's your stop loss? Where's your entry levels? And if any questions, feel free to ask next week. Okay, so again, thank you very much. Have a very good week and happy trading. Thank you so much.